Before the first shot is fired, someone opens a wallet. This is the silent, unwritten rule of all modern conflict. It is a fundamental truth that precedes every strategy session, every troop movement, every political declaration. An army cannot march on rhetoric alone. Soldiers require boots, rifles, rations. Tanks need fuel, jets need missiles, ships need functioning radar systems. All of these things, from the simplest bullet to truly comprehend the reasons wars begin, how they are sustained, and why they end, we must learn to follow the steady, powerful flow of money. The narrative of war is often told through the lens of ideology, national honor, security imperatives. These are the stories that fill headlines and fuel patriotic fervor. Yet beneath this public-facing chronicle lies a colder, more calculated ledger. This ledger records transactions in dollars, euros, yuan. It details contracts, loans, investments. It is a story of finance, not just fighting. By examining this hidden financial architecture, we can begin to see the intricate web of interests that connect boardrooms to battlefields. The questions it forces us to ask are simple, yet profound. Who pays for the immense cost of war? And perhaps more importantly, who profits from it? This financial trail does not diminish the human cost of war. The sacrifice of soldiers and the suffering of civilians remain the ultimate price. The scale of spending in modern warfare is almost beyond comprehension. The numbers are so vast, they seem to lose their meaning, becoming abstract figures in a history book. But these figures represent real resources, diverted from other potential uses like healthcare, education, infrastructure. Consider World War I. At the time, it was the most expensive conflict in human history. The total cost is estimated to have been around $337 billion in today's money. This staggering sum reshaped global economies, toppling empires and creating new financial powers. It was a bill that generations would have to pay, setting the stage for future economic instability and strife. Just 2 decades later, the world plunged into an even costlier conflict. World War II dwarfed its predecessor in every way, including its financial toll. The estimated cost, adjusted for modern inflation, is a breathtaking $4.1 trillion. Long before the advent of complex financial derivatives, governments had a straightforward tool for raising money quickly: taxes. In ancient times, a king would levy a tax on his subjects. That money paid for soldiers and campaigns. As wars grew larger and more expensive, taxation alone could not cover the costs. This led to the widespread use of a more sophisticated instrument, the war bond. A war bond is basically a loan from an ordinary citizen to their government. During the 20th century's great conflicts, bonds became indispensable for financing total war. The appeal of war bonds was twofold. First, they provided an immediate, massive infusion of cash into government coffers. Second, governments launched public campaigns urging citizens to buy bonds as a patriotic duty. United States, Great Britain, Canada, posters, films. The war became the people's project. But there's a less celebrated consequence. The financial burden of war spreads across the entire population. When a citizen buys a bond, they're promised their money back, with interest, later. After the war, the government must honor these debts. Often, the state issues new bonds to pay off old ones, rolling over the debt. This is how modern public debt expands. A war fought in 1 decade can leave interest payments lasting many decades. In his farewell address to the nation in 1961, U.S. President Dwight D. Eisenhower, a former 5-star general, delivered a solemn and prescient warning. He spoke of the rise of a new kind of power in American life, a power he called the military-industrial complex. He described a dangerous symbiosis between a massive military establishment and a large arms industry. Eisenhower cautioned that this powerful network of defense contractors, military leaders, government officials could acquire unwarranted influence in the halls of government. In simpler terms, the people who profit from selling weapons might develop an interest in promoting the conditions that require more weapons, tension, conflict, and war. This complex is not a shadowy cabal, but an open and observable system. It is composed of large, publicly traded corporations that design and manufacture everything from fighter jets, aircraft carriers, surveillance software, guided missiles. These firms employ hundreds of thousands, invest heavily in research and development, constantly pushing the boundaries of military technology. To ensure a steady stream of government business, these companies invest in political lobbying, advocating for higher defense budgets and specific weapons programs. When the government increases defense spending or engages in a military campaign, it awards massive contracts. These contracts guarantee revenue, boost stock prices, and deliver profits. As Eisenhower feared, this iron triangle can create a momentum that is difficult to question or reverse, aligning economic incentives with high levels of military expenditure. While wars are often framed around ideals like freedom and security, they can also be driven by the cold, hard logic of resources. Of all the world's resources, none has been more central to the geopolitics of the last century than oil. Oil is the lifeblood of modern industrial economies, powering cars, factories, power plants. Critically, it is also the fuel of modern armies, tanks, jets, naval fleets. Consequently, control over the world's major oil reserves and the shipping lanes used to transport it has been a central, if often unspoken, objective of foreign policy. The 2003 invasion of Iraq is a complex case study. Public reasons centered on weapons of mass destruction and liberating the Iraqi people. However, Iraq holds some of the largest proven oil reserves on the planet. Following the restructuring of the Iraqi state, vast oil fields opened to contracts with major international energy corporations. In Libya, 2011, intervention was presented as humanitarian, yet Gaddafi's push for a pan-African gold dinar to price oil challenged dollar dominance. Shortly after these plans gained traction, pressure escalated into military action. Economic motives intertwine with political and security justifications. War is rarely about just one thing. When a nation goes to war, the costs are broadly distributed through taxes and debt, but the profits are often highly concentrated. Dynamic stock ticker with defense names rising. The most direct beneficiaries are defense industry firms. Lockheed Martin, the builder of the F-35 fighter jet. Raytheon, a major producer of guided missiles. Boeing, a giant in both commercial and military aviation. They often see fortunes improve during heightened geopolitical tension and military spending. The mechanism is straightforward. Rising demand translates into expanded contracts. Investors anticipate years of government revenue. Share prices climb, enriching executives, institutions, and individual shareholders. Beyond prime contractors, private security firms, logistics and transportation, construction and engineering, and even insurers profit during war and reconstruction alike. This web of profit creates a powerful constituency. For these firms and their investors, a rising defense budget is good news for the bottom line. War, for all its horror, is also a business, and for some, a very profitable business indeed. The methods of financing war are evolving alongside technology. While bonds and taxes remain central, a new set of tools is emerging on the digital frontier, funded, fought, and constrained. One of the most significant developments is cryptocurrency. Digital currencies like Bitcoin offer rapid, semi-anonymous value transfer across borders. Non-state actors, volunteer groups, even governments can fund activities outside conventional channels and bypass international monitoring. Simultaneously, the interconnected financial system has enabled powerful economic sanctions, cutting access to banking, freezing central bank assets, blocking dollar transactions. Sanctions can cripple an economy, making it hard to import, even for military parts, slowing a war machine without firing a shot. Financial warfare now targets individuals, seizing superyachts, jets, luxury properties, and bank accounts to inflict personal pressure. Expect state-backed digital currencies designed to evade sanctions and escalating cyber attacks on financial institutions to steal funds, disrupt markets, and sow economic chaos. Next-gen weapons in space, Artificial intelligence and cybernetics will drive military budgets higher, requiring ever larger investments. The fundamental principle remains the same, but the tools are changing. The battle for financial advantage is now a critical front in any major global conflict. If we strip away the flags, the anthems, and the speeches, we are left with a stark reality. War is an economic enterprise. Armies march on a road paved with money. The decisions that lead to conflict are shaped in boardrooms and finance ministries just as surely as they are in war rooms. The flow of capital forms the invisible architecture of modern warfare, more accurate than any political diagram. This is not cynical, it is empowering. If money is the engine driving war's machinery, it can also be the lever to build a foundation for peace. The same systems, global finance, government budgets, corporate resources, can be directed toward different ends. Trillions can rebuild shattered cities and support refugees rather than fueling the next conflict. Next time tensions rise, ask, who is paying for this? Who stands to gain? Which companies' stock prices are rising? Where are the contracts going? Answers lie in financial statements, budget reports, and stock data. Making these connections visible empowers a more informed public debate. If we want fewer conflicts, we must make the economics of war transparent. Scrutinize the ledger, question the costs, identify the beneficiaries. Only then can citizens choose between profit through conflict and the harder, more rewarding path of investment in lasting peace. The choice will define the century to come.